If you're a SOFI or a Tesla investor, then get ready because things are about to get interesting. Even if you're investing in PLTR, NVDA, Meta, Microsoft, Google, or the SPY, things are going to get very, very interesting in the coming month or two. And I'm going to dive right into everything. Don't skip any part of this video. I'm going to explain why all of this is manipulated and why I was correct again when I called it a few days ago in one of my most recent uploads that this was going to happen, that they are going to manipulate the market. I'm going to explain everything to you. Let's dive right into Tesla and SOFI. But first, my masterclass webinar returns this Friday, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific. If you want to learn the market and understand what you're doing wrong and why it's manipulated, how to make money, whether it goes down or up, then this webinar is for you. Just like I am about to explain in this video, everything is manipulated, and I'm going to show you guys what is behind the curtain on the stock market and how you can start generating money. I'll be teaching things that I only exclusively taught my elite Discord students in this webinar, so you don't want to miss it. 3 p.m. Pacific, 6 p.m. Eastern time this Friday, May 23rd. You guys want to be there to learn everything I intend to teach you so you can get better in the stock market. And I'll have a huge announcement, and there'll be a Q&A so I can answer your questions. I look forward to seeing you there. So the stock market is heavily manipulated. I told you guys a few days ago the market was going to pull back. I had a lot of questions and comments on YouTube saying there's no way the SPY is going up and it doesn't look like this is going to happen. Well, today there was some news about bonds exploding on the 30-year yield and some geopolitical issues. And you might say, well, Corey, this was kind of unforeseen. No one could have known this was going to happen. But I posted in a video several days ago that the market was going to pull back. Maybe not to the all-time lows over the past few years that it was. Maybe not to the low of last month or the month before when the market's tanked, but it would pull back. It's manipulation. Let me explain what I mean by manipulation. You see, the geopolitical issues could have taken place overseas regardless. But because mainstream media is heavily influenced and manipulated over here in the United States, they broadcast these things in such a way to spook investors. They tried with Moody's last week. It didn't work. Then they tried with more tariff news. That didn't work. Then today, the 30-year bonds exploding and more geopolitical issues causing the market to go down. Remember, mainstream media in the United States get to choose what they broadcast. If they don't broadcast it, we wouldn't know. Just like all the airplanes that were crashing 2 months ago and now it's crickets. Just like the Ebola outbreak in 2016 and, just disappeared, gone like it never existed. Mainstream media has ways of manipulating, and they're heavily influenced and bought. They're owned. Big institutions own them. Rich, elite people own news and media. And it is fake news a lot of the time, or heavily influenced or manipulated. They need to get this market down, and they're going to do it one way or another. Unless, of course, we retrace our steps, which is not good. If consumers, and generally speaking, the public, retrace or digress backwards, a recession would be imminent, which we can't have right now. They're so good at manipulating, they'll push us as far as they can without actually creating a recession. They know exactly what they're doing. When you really sit here and think about it, the Moody's news, and then we had more news about tariffs that were negative, and now this is negative. And you look at dark pool data, and I showed my Discord in March that the end of April, beginning of May was bullish. And I also showed them that the middle to end of May, beginning of June was slightly bearish going to the month of June. Then I showed them that drawing wedges on the charts aligned with the end of June, beginning of July, where the bullish options, sweep, and block orders and dark pool data from bearish to bullish yet again, which lines up specifically with where interest rates are likely to get cut based on what Jerome Powell has stated indirectly over the past few months. So when you sit here and think about it, we knew that the interest rate cuts were highly likely for the beginning of July or middle of July, somewhere in the first few weeks of July. And all of the data and analytics and my graphs on the charts line up for a bullish explosion at the beginning of July. And now we're down to the wire. We only have about 4 to 5 weeks, or they have 4 to 5 weeks to get their money in. And now we're getting hit relentlessly with all this weird and bad news. They need to get their money in when interest rates are cut, and they need to get in at a lower price. Everything's manipulated. This is what I teach my students, how to understand the manipulation. A lot of people got stopped out, stop loss hunting, as well as margin called, and a lot of rage selling at the end of April, which caused a lot of losses. My students and I held Microsoft leaps, AMD leaps, Meta, Google, Wayfair, Ford, a lot of stocks. I made $20,000 on Microsoft, $20,000 between Wayfair and Ford, another $10,000 or almost $10,000 on AMD, and my students made a lot of money. We made a lot of money by holding through all of this noise. So I want to show you guys what's going on and why this is a buying opportunity for SoFi and Tesla, and why you guys should not be selling, why you should be dollar cost averaging and preparing yourself for a very big move this summer, because this pullback is only going to last a couple of weeks at the most, probably not even. It may only last a couple of days because they may not get it as low as they want. It's hard to tell exactly what's going to happen because of all the manipulation, but there is going to be a dip and they are going to buy into that dip. It's just a question of how big it is, how long it's going to last, and what they're going to use to get the dip to happen. But the Trump put is alive. Inflation year over year is down. Jobs added is also up, and unemployment's down. Data is good, pretty darn good. So right now it's all manipulation. They have to use geopolitical issues to get the stock market to come down. And Moody's, you notice they were talking about recession and inflation and GDP and all this data, PMI manufacturing, PMI services data. And after we crushed all that data and it was all good, now they're talking about geopolitical issues because they can't talk about the market and they can't talk about US data because it's good. So then Moody's had to downgrade the debt, which was already downgraded 14 years ago, and that didn't work. So where do they turn to? Geopolitical issues, like as if we didn't know what was going on overseas. And now magically oil is up, crude oil is up, and the bond market's exploding, which is not good for the stock market in any sense. And I'll explain that this Friday in my masterclass webinar, 6 p.m. Eastern, 3 p.m. Pacific, this Friday, March 23rd. Don't want to miss it. We're going to talk about all this stuff. Look, you guys have to understand, it's heavily manipulated. They move from one topic to the next, which is pretty much what they've done. We've eliminated their need to talk about the U.S. economy outside of geopolitical issues and as far as the things I've talked about in this video, which is like the debt and the unsustainability in the debt. They're not even talking about the tariffs. They tried that. That didn't work. They are right now reaching. Have you seen it? You open your eyes and see what's really going on. They are reaching everything they can to put on the news, to psych us out, spook us, and get us to sell. And it started happening today. Right now, it's happening, but it's slowed down. I'd imagine some investors realize, wait a minute, this makes no sense. It's not a selling opportunity. It's a buying opportunity. Shouldn't be selling right now. Should be looking to dollar cost average. And I told all of my students in Discord that this was happening. And when it started happening, to make sure you have enough cash. Most of my students are 30, 40, 50% of their portfolios in cash. Me, I'm over 80% cash. This way I can buy when the dip happens and make money. That's what we do. That's what I teach. Safe trading, safe investing. But I understand what's going on. So let's take a look at SoFi, Tesla, and let me show you why it's a buying opportunity soon, not yet, but how to get ready for this. And things are going to be moving quite a bit this summer. So here, looking at SoFi, we can see the stock is coming down pretty close to its support level, which is $12.34 and as low as $12. But really, the median average, which is my AVP, which is a strategy I teach in my Discord, and I'll be teaching some of that this Friday as well. The average weighted price area on SoFi is between $10 and $12, right about here. $11.50 to $12.50 is a sweet spot. So as we get into the lower 12s, if SoFi was to dip down to like $12.38 or even like $12, I would be adding a lot to my position. We go to the 4-hour chart. I'll show you even stronger AVP, right around $13.50 all the way down here to about $11. So this $2 range, really honestly, $11 to $12.50 is even the lower part of the AVP, which is really, really good. So if you can get into SoFi under $12.50, very good price. And I'll be looking to add to my position in SoFi because of this. Fundamentally strong company. Anthony Noto is very intelligent, and this is going to be a very, very strong stock continuing through and going on 3 to 5 years from now, with a price to sales currently at 4. It had 2 last year. It reached 6 and then dialed back to mid to high fours. The average stock in the financial space is between 16 and 24, meaning if you divide 4 into 16 or 24, you have like a 4 to 6x return, meaning that SOFI could be anywhere between $40 and $70 in the next 3 to 5 years. This is a very good investment. Anthony Noto is very good at sandbagging a stock, under promising and over delivering. So if you are holding SOFI, this is going to be a buying opportunity for you. And looking at the technical analysis, we can see that the 100-day just crossed over the 200-day. 50 is above. The 10 and the 20 are dropping, and they're diverging on the 50 and hitting the 100-day, which they typically do, meaning SOFI dipping below 1250 is unlikely. It looks to be the bottom this week. If SOFI it's 1250 or lower, I'd be looking to add to my position. On the daily chart, the 50 is above the 200. It's diverging up on the 100-day, and we're looking for it to cross over. On the daily chart, I would love to see that. We're maybe 2 days away from this happening, potentially, and the divergence is happening on the 10 and the 20. Any of this stuff is confusing you, you want to be at my masterclass webinar this Friday, because I teach all of this technical analysis. Like I said, this Friday, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific. You guys want to miss it? I'll have a Q&A, be able to answer your questions. I have a huge announcement, lots of training just like this. So SOFI is looking really good at this price, and personally, I'm going to put a line right around here so you guys can see this is where I'm looking to enter. I'll make this red because it's for put options. I'll be looking at some put options around $12 to $12.50. I'll probably sell 3 puts at $12.50 and 3 puts at $12 just to see what happens here. I would not mind that at all, because that would be an average cost of $12.25 minus my premium, giving me an under $12 average, which I already have, but acquiring more shares. Because remember, it's not just about averaging lower. You can also average on the high, but you want to follow the 33-10 rule. 3 trades in 10, 33 out of 100 is a third, 2/3 is 333, which is my 33-10 rule. But not only that, you also want to average, dollar cost average, 2 on the dip, 1 on the up. 333, 33-10. My 33-10 rule, what I teach in Discord exclusively to my students, is very powerful. It pretty much eliminates any chances of major losses, protects your account, and allows you to have a very powerful dollar cost average. When the stock moves, you make abundant amount of money. If you want to learn this strategy, I'll be going over it this Friday as well in my masterclass webinar. Tesla, Elon Musk is stepping up quite a bit and really taking back his role as CEO over at Tesla, like really being more involved, so to speak. And they're taking it very seriously with all the risks with autonomous driving and self-driving. They're really taking it slow and cautious, but next month in June, there's a lot that awaits Tesla. And even Jensen, the CEO of NVDA, said that the demand for robots and AI is surged out of control, and Tesla's going to grow so much once all of this really starts to come to fruition, which is starting to take place. But next month, there's a lot going on with Tesla, which is very strong. And with this sell-off bringing us back down to the 330 mark, we can look at my AVP on Tesla. You can see that the AVP on Tesla is roughly between 220 and about 300. So the average weight is around 260, 270. We're not too far off from there, but I do see there's a chance that Tesla could pull back to 290, 295. And if it does, I'd be looking to add anywhere between 270 and 290. I'd be looking to add to Tesla. And if not, I would be holding, would not be selling at this point, because if things go well with robotaxi, autonomous driving, all the events coming up at Tesla, and of course, earnings that's coming up in July, June and July, interest rate cuts, tariffs, all this stuff starts to become better and everything goes the way it should, Tesla could be right back up at 500, which gives you almost a 2x return from right now in the coming few months. And as things get better and as they develop robotaxi and autonomous driving even further, where self-driving is fully automated, once it's safe and they get past all of this and robotaxi is implemented across the states, maybe even worldwide at some point, Tesla could easily see itself to $1,500 or more per share. Of course, they'll need to get a forward split going where it'll end up being like a 10-to-1 and you'll end up having $50 to $100 a share again. Something like that will happen like it did with Walmart and NVIDIA most likely, but we're getting ahead of ourselves here. There's a lot on the table for Tesla, and there's a lot of strength. When you look at this chart, a lot of strength in the $300 range, and we're not far from $300. So anywhere between $250 and $300 is very strong. If it pulls back, I would dollar cost average. If it does not pull back, then I would hold right now to make sure there's stability in the coming few weeks, because if there's a dip, you'd want a dollar cost average that dip. And the 12-month target recently is now 285 with an 18% downside. I personally don't see that if things turn out next month. If robotaxi and all that gets kind of messy, then maybe there could be some more bumpy road for Tesla. But right now, I think things are going to be very, very interesting. The market is kind of in a weird position. When you look at SPY, it's pulling back and it's broken this downtrend to some degree. It's in the process on the 4-hour candle. On the 1-hour candle, it's resisted just below the line at 584, showing some pretty decent strength in the 580 range, which I did say in my most recent video. I told you guys this was going to happen back on Sunday and Monday. I said this SPY and the stocks are going to pull back, and if we break below this line, we're back into this downtrend again, which it looks like is happening, and it's going to dwindle down into the end of June, beginning of July, where it runs, which is all manipulated for where the interest rates are going to be likely to be cut. And when we look at Palantir, it's pretty much the same thing. I told you guys not to buy Palantir when it was up at 130, that this stock was going to slip back into the 120 range. It's done exactly what I said it would do. But Corey, how did you know that? Dark pool data, years in the market, my technical analysis, my AVP, my 3310 rule, everything that I do, my methods to all of my madness, which is what I teach my elite students in Discord. I'm going to be teaching all of you if you show up this Friday, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific. I'll be teaching you guys all of this stuff. Links in the information box below if you guys want to be at that webinar. It's very important to understand not to buy at the top, sell at the bottom, which is a big part of what I teach, psychology, understanding the market. And as you can see, Palantir is going to continue to dip. I called it a few days ago. Palantir is likely to dip into the 115 range, which is why I said not to buy Palantir a few days ago. I would not want to buy Palantir at this price. Not a good idea. Google strong from some most recent news, and under AI, things are looking good for Google, but even it's pulling back. Affirm has pulled back a decent amount, and we look at Meta and it's pulling back a little bit. Not much, but it did pull back. I got out of Meta back around 658, so I'm not looking to get back in just yet. If Meta dips back down in the high fives, low sixes, I'll look to re-enter Meta. And this is how we trade. You want to always be entering near the bottom, or at least midway down in the AVP area, my AVP, which is my proprietary and custom tool that I use to gauge the market and price action, which is key. And the same thing for Microsoft. It's pulling back a little bit, but not much. Microsoft is pretty strong. So you can see how the market is heavily manipulated. I showed you the wedge on the SPY, and it just so happens to align with the end of June, beginning of July, which is where interest rates are supposed to be cut. And now they're using every bit of data they can to tank the markets down. I told you not to buy the SPY or Palantir or pretty much nothing a few days ago, that it was going to pull back. Here it is. This is what they do. And if you're wondering how I know this, it's because I've been in the market a long time. It's psychology, manipulation, dark pool data. If you're wondering how to get started, how do I learn this? How do I get better and make money? I would love to help you, fam. This Friday, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific is my free masterclass webinar. I'll be teaching all of this, from how to make money in an up market, down market, psychology, manipulation, dark pool data, and show you how to make the profits we're making right there on the screen. And so you guys can start having financial freedom. The link's in the information box below. Register now. Limited spots available. I have a huge announcement. I'll be answering a Q&A, and I'll be seeing you at the webinar this Friday. Take care of yourselves, fam.